Hello, traders, and welcome back to the Forex Geek, where we dive deep into the tools that can help you make smarter trading decisions. In today's video, we are going to be talking about the powerful Ichimoku ADX strategy, which is a comprehensive approach that combines the visual strength of the Ichimoku Cloud with the trend confirming capabilities of the average directional index. This strategy will transform how you identify strong trends, find optimal entry points, and manage your trades with confidence. Many traders struggle with determining when a trend is strong enough to trade or when to stay on the sidelines. By the end of this video, you understand exactly how to use these two indicators together to create a robust trading system that filters out market noise and captures significant price movements. Stay tuned to learn this game-changing strategy that could significantly improve your trading results. So without wasting any much of your time, let's get started. First of all, let's define the indicators which we are going to be using for this strategy. First, we have the Ichimoku Cloud, which I have just included on the chart. Now you can see that the Ichimoku Cloud provides a complete market view through five key components. This is a Japanese indicator, so you're going to be hearing some funny names. The first component is the Tenkan Sen, which is the conversion line. I'm going to show you from the settings here. The conversion line, which is this blue line right here, the blue line. Now, the next is now you should know that the conversion line is a 9 period average of high and low, acting as dynamic support and resistance. The next is the Kijun, which is the baseline, and there's a red line, and you can see that line is the 26 period average of high and low, serving as a stronger support and resistance. The next component is the Seku span A, which is this leading span A, and we also have the leading span B. Now, the leading span A is the average of the Tenkan Sen, which is the conversion line, and the baseline plotted 26 periods ahead. I should also know that there is another one which is the Seiko span B, 52 period moving average of high and low plotted 26 periods ahead. This forms the cloud. Now, the last component is the Chiku span, and this is the current price plotted 26 periods back. That is called the lagging span. The Chiku span can also be known as the lagging span. Now, these components work together to give us trading signals in the market. The cloud formed between span A and span B, just like I said, represents future support slash resistance zones. So price above the cloud indicates an uptrend, while price below the cloud like this represents a downtrend. You can see price is below this cloud, so there's a downtrend. And when price is above the cloud, so you can see here we have price being above the cloud. So that is an uptrend. Price being above the cloud, we are in an uptrend. So that is that for the Ichimoku cloud. Let's quickly look at the ADX, which is the second indicator we are going to be using for this system. Now, this is the ADX, and it measures the trend strength on a scale from 0 to 100, displayed with two directional movement indicators. We have the positive DI and we have the negative DI. I'm just going to go to the settings and show you. All right. We have the positive DI, which is the green line, and the negative DI. Then we have the ADX line, which is this dark blue line right here. So the way it works, ADX reading interpretations below the 25. I'm going to use 25. Now, when ADX is below 25, it suggests a weak trend or a ranging market. When it's between 25 to 45, it suggests strong tradable trend. When it's above 45, it's an extremely strong trend. So when the ADX is just below 25, you should know that that trend is weakening, or when it's going below it, like you can see it here, it went below it right here, went below it here, went below it here, showing weakening trend, ranging market. You can see it here, and at the same time, you can see you have price ranging here, showing weakening trend, that this bullish trend is weakening and we should be looking for we should be expecting potential reversals in the future. Now for DI, for the positive DI, the directional movement indicators, the positive DI being above the negative DI signals an uptrend, while the negative DI, which is the red line, being above the positive DI signals a downtrend. So I believe with this, we now understand how these two indicators work. Let's dive straight into the strategy. How can you use these two indicators to trade in the market? So the first step is to identify the market direction with Ichimoku. So I'm going to add the Ichimoku back to the charts. So the first step is to identify the market direction with Ichimoku. Now, first determine the overall trend. For a bullish buyer, you should look for price trading above the cloud. We've said this before. And also the Tekken Sen, which is the conversion line, should be above the baseline. And you can see that here. Price is currently above the cloud right here. And also we have the blue line, which is the conversion line, being above the baseline, which is the red line there. So this signals a bullish trend. You should also look for the lagging span, which is this green line. Remember, it should be above price from 26 periods ago. So you can see it has been above price from around here, signaling that indeed we are in a clear bullish trend. We are in a very strong bullish trend. So that is, we use the Ichimoku to first of all check the trend of the market. So the first step is identifying the market direction. The next step, the second step before we take our trades, is to verify the trend strength with ADX. Now once you've identified the trend direction, you should confirm its strength using the ADX indicator. Now an ADX reading above 25, remember this is our line. I'm going to make this line a thick one so we can see it better. Now this is 25, the 25 line, 25 level. So when the ADX is above 25, it signals that the trend is strong enough to trade, while readings below 25 suggest a ranging market where trend-based trades should be avoided. Additionally, you should check that the positive DI is above the negative DI for uptrends. And for this, we are in an uptrend, so we are looking at the positive DI, which is the green line. It is above the negative DI, so that is clear. Also, we should check for the ADX being above 25, and the ADX has been above 25 from this level. That's just been rising. Also, we have the crossovers happening around here. We have price moving above the cloud here also. So all these signals that we are bullish and we should be looking to take trades. The trend is strong, the market direction is bullish. Now, on to the third step. The third step is to look for high probability entry signals. So after this, you should look for confirmations that you should enter. You should look for things like your order blocks, your breaker blocks, or you could look for candlestick patterns that could signal an entry point. Now we know the direction of the market, and we should be looking to take entry points. You can see there is a support level right here where we can trade from. There are several opportunities in which we can use to enter the market. We also have an FVG, which the price traded from around here. Have that small FVG there. Also, there are also, you can see these rejections, it's rejection candles. This is a hammer candlestick pattern. So we just look to take our trades using the hammer, or we used to take our trades from this support level here with our stop loss below this level here, and I'll take profits all the way. And that leads us to our next step, which is setting stop loss and take profit levels. So for long trades, place your stop loss below the most recent swing low or below the cloud. As you can see, I place my stop loss below this swing low here, or I could just place it below this cloud. Either way, I should just ensure I place my stop loss. And also, you should set your take profit at the next significant resistance level or previous swing high. So we are very bullish here, and resistance levels aren't clear enough. They are very low. We have former resistance levels around here. So we just set our take profit levels at fixed risk reward ratios of 1:2 or 1:3, depending on the one we are interested in. And also ensure you manage your trades. You could use trailing stop loss. We use trailing stop loss to follow your trades using the conversion and baseline. Ensure you are following your trades. You could also use the cloud so to ensure price doesn't move against you. Now for a bearish setup, we have an example here for a bearish setup, and you can see that price was below 25 here, so we couldn't take any trade, any sell trades. Even though we had price being below the cloud, we have price being below the cloud here, and also we have the baseline being above the conversion line here. So this is a clear indication that we should be selling. So as you can see, we finally had the ADX go above 25, showing us a strong bearish trend. So we're looking to take our sell trades from there. At the same time, we have all of these confirmations happening at the same time. So we're just take our sell trades here with our stop loss above that swing high. And we could set our take profits all the way down 1:2 or 1:3, and you can also see our ADX indicating that this trend is weakening around here where it went below the 25 level. So we could just look to take our profits at the same area, which is here. So that's how we could use the ADX and the Ichimoku Cloud to trade. This strategy works best on the 1 hour time frame and higher, where trends tend to develop more clearly with less noise. For day traders, the 15-minute and 30-minute charts can also be effective when trading during active market hours. So by requiring confirmation from both trend direction, Ichimoku, and trend strength, ADX, you avoid many false signals and low probability setups that plague less disciplined traders. So alright traders, you've come to the end of today's video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, don't forget to like, subscribe, and turn on the notification bell so you never miss out on more trading tips and strategies. Thanks for watching, and I'll see you in the next video.